Welcome to today's market breakdown. Let's talk about what just happened with Strive Inc., trading under the ticker ASST, because this move caught a lot of people off guard. On Friday, ASST didn't just move up with the market, it exploded, gaining more than 20% in a single session and closing near the $12 level. Volume surged, momentum accelerated, and suddenly this stock was everywhere. The big question now is simple but important. Is ASST trying to become the next MicroStrategy? To understand that, we need context. Strive was not always a Bitcoin-focused company. Until recently, this was a digital marketing business operating in near obscurity, a low-price stock, minimal attention, and no real connection to crypto. What we're seeing now is not gradual evolution, but a complete transformation. The foundation of this move was a cleanup of the company's structure. The reverse stock split wasn't just cosmetic. It lifted the share price into a range that institutional investors are allowed to touch. Many large funds are restricted from buying stocks under $5, and this move effectively unlocked that door. But structure alone doesn't buy Bitcoin. Capital does. The real catalyst came with the completion of a $225 million capital raise using preferred equity. That money gave Strive a serious war chest and confirmed to the market that this strategy wasn't theoretical anymore. It was operational. With that capital and a series of acquisitions, Strive is now holding roughly 13,131 Bitcoin, placing it among the top global corporate holders. That alone changes how this company needs to be evaluated. At this point, ASST is no longer trading on traditional business fundamentals. It is trading as a Bitcoin balance sheet. Where things get interesting is how Strive is accumulating Bitcoin. Instead of only buying on the open market, the company has started acquiring entire businesses specifically to absorb their Bitcoin holdings. One of the most notable examples was the acquisition of a company holding thousands of Bitcoin, where the operating business was secondary to the Treasury itself. This approach allows Strive to acquire Bitcoin at a discount when a company's market value is lower than the value of its Bitcoin holdings. This is very different from how MicroStrategy operates. MicroStrategy primarily uses convertible debt to fund Bitcoin purchases. That debt structure is efficient, but it comes with strict obligations. Mispayments and bankruptcy becomes a real risk. Strive's use of preferred equity changes that equation. Preferred dividends can be deferred during market stress without triggering default. That creates breathing room during periods of volatility. Because AST has a much smaller market capitalization than MicroStrategy, its stock reacts more violently to demand. It doesn't take billions of dollars to move this stock. When buyers rush in, the price can move extremely fast. That's why ASST often outperforms Bitcoin on the way up. It's a high beta proxy. But leverage works both ways. If Bitcoin pulls back sharply,